Hello friends, we'll be discussing an illustration which will have two basic case studies where the concept of issue of debentures for consideration other than cash will be discussed. So let's start with it. Now in the previous video we have understood about different case studies on the same concept whereby we have issued debentures for consideration other than cash. On the similar baseline, we'll have two more case studies with similar concepts of it. I'm just saying similar concept, not the similar sums. So there will be certain variety of problems that you will face in these two case studies that we are going to study right now. So let's start with the writing down or rather jotting down of both these cases. So we have prepared both these case details here. We have mentioned what exactly do we want to pass out or rather figure out in both these case details. So we'll first read out the case 1 details what we have mentioned. Now it refers to Messrs XYZ Limited who issued 60,000 10% debentures of rupees 100 each. Application they collected 20 rupees. On allotment and final call, they collected 40 rupees each. Now, the subscription that they received was for 70,000, which was completely allotted. That means pro rata allotment was done here. 5,000 debenture holders failed on paying the final call money is what they've mentioned. Now, company increased the production line and made a purchase of certain machine worth rupees 50 lakh, for which the payment was done in fully paid up debentures of rupees 100 each. That means we have to figure out how many debentures we have issued here. Company also made a payment of 10 lakh to the promoters and that was also paid via debentures here. So these are the details for case 1. We have to prepare the journal entries and balance sheet. Let's move on to case 2 details now. Messrs Case-wise Limited issued 5,000 11% debentures here of rupees 100 at 120. That means there is a premium here. All these shares were duly subscribed and paid for and each call was for rupees 40 each. Now, company made purchase of certain assets and the payment was also done by paying 50% in cash and 50% by paying up in debentures. That means whatever asset they have purchased, total of all that has been paid 50% in cash and 50% in debentures. This is what they have mentioned. Now, they purchased land worth rupees 20 lakh. They purchased a machinery for 10 lakh. They purchased handloom equipments for worth rupees 5 lakh here. And stabilizers were purchased for worth rupees 5 lakh. We have to prepare the balance sheet and journal entries for this case as well. Now that we know both these cases, let's figure out the journal entries for case 1 then. So when it comes to case 1 journal entries, we have mentioned the first set of entries that we have to pass. Now, when it comes to receipt of application money, the issue was for 60,000 debentures. However, we have received debentures worth rupees 70,000, or rather we can say worth 70,000 debentures. So the first entry will be bank account debit to debenture application. 70,000 debentures multiplied by 20 will give you the amount of application money received. That will be 14 lakh rupees. Now, here 14 lakh rupees has total of 10,000 excess money that we have received, because the allotment will be only for 60,000 debentures here. So we'll transfer this money first to the debenture capital. That entry will be debenture application account debit to 10% debenture to debenture adjustment allotment account. So out of 14 lakh, debenture capital, or rather application capital, will be only 12 lakh rupees, as 60,000 multiplied by 20 gives you that answer. And rest difference, that is 2 lakh rupees, will be the amount that we can adjust when it comes to the receipt, or rather when it comes to specifications of allotment here. Now, the third entry will refer to debenture allotment. So that will be a simple entry. Debenture allotment account debit to 10% debenture, 60,000 multiplied by 40, that is 24 lakh rupees is what we are expecting. But we won't get total 24 lakhs because we have certain adjustments to be done. So the receipt entry will be bank account debit to debenture adjustment allotment, which is a total of 2 lakh rupees, which has been mentioned, and to debenture allotment account, which is 24 lakh. So 24 lakh is what we're expecting. 2 lakh we have already received. So in our bank account, it will be 22 lakh that we have received here. Now, after allotment comes the final call, or rather final call due entry. So that will be debenture final call to 10% debenture here. Again, 60,000 multiplied by 40, that is 24 lakh rupees. And when it comes to receipt, they have also mentioned that 5,000 debenture holders didn't pay that final call money. So 5,000 multiplied by 40 will give you 2 lakh rupees is what we haven't received. Just similar like to the receipt entry of allotment, whereby 24 lakh is the expected amount, 2 lakh will be subtracted as we haven't received it. So in the bank account, what we'll receive is 22 lakh itself. Now, with this, we have completed the entries only until the issue of debentures. Now comes the time whereby they go ahead and purchase certain asset and the payment has been done for that. So let's pass the journal entry for that, post which we'll prepare the balance sheet of this specific question itself. So we have prepared the next set of entries as well. That means the asset that was procured here by issuing 10% debentures. So 50 lakh was the cost of the asset. Entry will be asset account debit to 10% debenture account worth rupees 50 lakh here. Post which goodwill comes into the picture, whereby they have paid, or rather paid the promoters an amount of 10 lakh rupees. So promoters bring up the goodwill, hence goodwill account is created and the payment has been done by using 10% debentures here worth rupees 10 lakhs. Now when it comes to mentioning all these items in the balance sheet, we have a clear cut picture. Asset, that is machinery, 50 lakh rupees. Goodwill that has been created gives you a total of 10 lakh rupees. Bank account total, that means total of what you have received, gives you a total of 58 lakh rupees here. That gives you a total of 1 crore 18 lakhs on the asset side. Now when you come on the liability side, whereby debenture account is created, 60,000 multiplied by 100 gives you a total of 60 lakh rupees, plus assets and goodwill give you a total of 1 lakh, or rather 1 crore 20 lakh rupees. That is the debenture capital here. Out of which you subtract the calls in arrears, which is 2 lakh, then you get a total of 1 crore 18 lakh, which is moved outside. So the balance sheet tallies here at 1 crore 18 lakh for both liability and asset for case 1. So here it was a very simple example for you to make understand, or rather for you to understand how things work when it comes to preparation of balance sheet on the part of where consideration other than cash is the concept in issue of debentures. So this is what we had in case 1. Now we'll go and prepare the details of case 2, whereby journal entries will be passed for. Let's start with that. Now, when it comes to case 2, we have mentioned the journal entries here. 5,000 debentures were issued and all of them were completely subscribed and paid for. The only difference is that it was issued at 100, and rather the face value was 100 and issued at 120. That means there was a premium that was taken care in allotment. The first entry will refer to receipt of application money, that is bank account debit to debenture application, 5,000 multiplied by 40 rupees, which is 2 lakh. Now, this application money will be transferred to 11% debenture account. So, debenture application to 11% debenture account, 2 lakh rupees. Now, once this is done, we pass the allotment due entry, which is again very simple. Debenture allotment account debit to 11% debenture to securities premium. Amount will be 2 lakh rupees and equally divided, as premium is 20 rupees. So, capital will be 20 rupees, 1 lakh each. That means 1 lakh is the premium, 1 lakh is the capital here. Now, when it comes to receipt of allotment money, there are no calls in arrears as mentioned in the question. Hence, we'll consider that all the amount has been mentioned, or rather received here. So, the amount, or rather the entry, will be bank account debit to debenture allotment account, 2 lakh rupees. On the similar pattern, we have final call entry, and that means the receipt and due of final call has been passed. Due entry will be debenture final call account debit to 11% debenture, 2 lakh rupees. And the receipt entry will be bank account debit to debenture final call, as there are no calls in arrears, again rupees 2 lakh. Now that all these things are done, we come to the next part of the question, whereby they have purchased certain assets and the payment was made 50% in cash and 50% in debentures. So they have purchased land, they've purchased machinery, they've purchased handloom equipments, and they've purchased stabilizers. So all these four equipments or all these four assets have been lined down and the total comes to 40 lakh. So 50% being paid up in cash, that means 20 lakh in bank account, or rather 20 lakh goes out from bank account and 20 lakh goes out from debentures account. So this is the closure of the journal entries that we have. On this basis itself, we'll prepare the balance sheet. So let's start with that. So we've prepared the balance sheet here. We've mentioned all the assets on the asset side first of all. Total comes to 40 lakh rupees on the asset side. We've mentioned the debentures as well on the liability side, which includes 5 lakh of capital of the issue plus 20 lakh of the debentures which were issued for consideration other than cash for assets being purchased. Total is 25 lakh. Security premium has been added here, which gives you a total of 1 more lakh again. Now, as half of the payment was done via bank, that means there is a bank overdraft that we have taken here worth rupees 14 lakh. Hence, this has been mentioned because total of receipt from the issue of debentures is 6 lakh rupees. However, the payment that we have made towards purchase of asset is additional 14 lakh rupees, which gives you a total of 20 lakh as payment made in cash. So this has been done, or rather this has been mentioned. So the total of balance sheet comes to 40 lakh and there is a bank overdraft. So in this balance sheet, you have figured out how a bank overdraft will reflect in the balance sheet. So I hope this video has given you a clarity about the last problem, or rather the details of the last concept of a chapter of company accounts, which comes down to issue of debentures for consideration other than cash. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.